we know that maybe the numbers have just come out, but your initial thoughts, views with regard to Zomato's numbers?
Yeah, Harsh, I think revenue has been in line with our expectations, but in terms of net profitability, even we were expecting much higher numbers, and there has been a clear miss. What we see is that the top key quick commerce companies having raised funds, there is a race in terms of increasing capacity, increasing the networks, and hence you see the upfronting of the number of stores for Blinkit. Even Zomato has done the fundraise, and we could see subdued increasing competition and subdued numbers in the near term, not only in terms of financing costs, but I would see what Zepto has started doing is offering a lot more discounts, offering delivery at much lesser gov, and that is kind of increasing the competition. I think again, going back, you need to understand the numbers, but the race and higher competition in the quick commerce could lead to some kind of bloodbath in the near term quarters.
Uh, uh, would that, Siddharth, be an opportunity to buy? That's point number one. Point number two, what does this Blinkit upfronting of dark stores mean? From 2000 in December 2026, they've upfronted that target guidance to 2025. What, in your view, and I completely take your point that this can be ballpark. You don't have to be absolutely accurate about it. Your report can later on, tell us in more detail what it will mean. But just tell us what, in your view, does this mean right off the bat?
Yeah, sure. Right. Good question, Harsh. I think yes, definitely. I would believe for a long-term investor, it would mean a good entry opportunity. People would have missed buying Zomato at earlier levels. The stock is has come down from about 300 levels, and it was available at 240, 230 some time back. I think those would be good levels to add for a long-term investor. In terms of upfronting the stores, definitely there would be a big impact on the OPEX because some of the stores initially, as we know, based on the location, they take anywhere between 3 to 6 months for break even. Some stores in tier 2, tier 3 may take even larger than that, and hence a drag on the margins. Financing costs would also go up. So would be the other below EBITDA numbers. So I think next 2 to 3 quarters, if there is a aggressive ramp up in the number of stores, we could see these kind of subdued earnings for the next few quarters.